Can you explain why you think the 4-year cycle is over? Do you think that there's going to be a blow off top, or is there going to be a super cycle? You said Bitcoin would hit 999,999 by 2027. So are we still on track for that? What are your thoughts then on what's been happening now on this whole question around what is Bitcoin? Is it a risk on, risk off, somewhere in between?
But I think this recent drop in Bitcoin was more a wake-up call.
Recently, you sold your hype for two reasons. One was concerns about the unlocks that were coming up, and two was for a down payment on a Ferrari Testarossa. So my first question is, when does the Rari arrive?
My dealer sends me the new specs. I'm like, this looks cool. I want one. So they'll send me the price list and whatever, I'll buy one, but I have no idea.
Will you buy back post unlock? Would you consider getting back in?
We'll see what happens with the flows once this unlock happens. Everyone's like, oh yeah, Jeff is this really great guy. He's gonna make hundreds of millions of dollars every month and he's not gonna sell any. To sit here and assume, oh yeah, Jeff is never gonna sell any of these tokens. These teams are never gonna sell any of these tokens. It's complete nonsense.
You recently said ZEC to 10K. Do you really think that can happen? What's the time frame? What's the dumbest trade you've ever made that still makes you wince?
Ooh, I bought...
GM everyone, and welcome back to another episode of the Coin Bureau podcast. Now, today we have a returning guest, individual who has been on the Coin Bureau quite a few times already. It is none other than Mr. Arthur Hayes, the co-founder of BitMEX, the Maelstrom CEO, and everyone's favorite whale to watch. So, Arthur, welcome back.
Thanks for having me.
Cool, Arthur. So now I want to start with one of the most important questions in crypto. And to tee this off, I'm actually going to read a tweet from a tweet I saw on the timeline, which is quite funny. And it is from Macro CRG. And he says, I told my taxi driver I was in crypto. He said he was too. He then advised me to sell everything because the 4-year cycle is over. And I think that's quite apropos your recent piece entitled Long Live the King, where you talked about how the 4-year cycle is dead. So can you explain why you think the 4-year cycle is over?
So I think that putting a definitive number on how long a cycle should be should never be done. You should always basically evaluate the circumstances and then make a decision and not be held to some sort of dogma that it has to be this way because it's been this way in the past. And because I get asked this question a lot, especially during Token 2049 a few weeks ago, I thought, okay, let me just do a little chart study, get my thoughts on paper, and sort of answer this question so I don't have to keep, answering it every time I speak about stuff. And so I wrote this essay about the 4-year cycle and my view that the 4-year cycle does not apply in this particular circumstance. And how I got to that point was I said, okay, let's look at the 3 4-year cycles in the past, 2009 to 2013, 2013 to 2017, 2017 to 2021, 21 until the present moment. And can we find any patterns that sort of, roughly rhyme with each other? And obviously I have my own worldview, which is all about the quantity of money. How much fiat is there in the world? And I believe that Bitcoin specifically, and obviously crypto more down the line, is a reaction to the amount of fiat that has been created, especially since the global financial crisis in 2008. And I don't believe it's a coincidence that the genesis block of Bitcoin happened in January 2009 during the depths of the bear market. At the time when the Federal Reserve, led by Ben Bernanke at the time, restarted quantitative easing, at least in the United States context. And by that point, had already indicated that after the $700 billion bailout, the TARP bailout, that the Federal Reserve would start on unlimited quantitative easing. The markets bottomed in March 2009, and then it's basically been up only, with some minor blips from then onwards. And so if you think about Bitcoin from the first cycle, 2009 to 2013, we not only have the United States printing money, we also have China, which embarked on one of the largest infrastructure spends in their entire history in the 2008 to 2011 time period. And I showed a chart of the government credit impulse, which is the rate of change of how much credit's being created in China. And you see both America and China were printing a fuck ton of money. And of course, Bitcoin, went up a lot. Obviously, if you were trading Bitcoin in the fall of 2013, you remember the 40-50% premiums in China. I know I certainly remember that I was arbitraging it in Hong Kong at the time. And then as sort of 2013, the end rolled around, I posted a chart. You see that bank credit and Fed liquidity kind of rolled over a bit. China was not creating as much credit as they had been. And that was the pop of the first Bitcoin bubble, the 1300 or whatever all-time high was reached in December 2013. The next cycle was basically driven by China. So if you were trading crypto, I remember this quite vividly back in August 2015 is when you got the $135 wick on BitMEX, which was, a fellow named Zhao Dong got liquidated for 6,000 Bitcoin. It was a quite interesting day in the markets. And subsequent to that, within a few weeks, the PBOC did a shock devaluation of the yuan, and that really kickstarted the bull market that ended in 2017. And so China did another massive stimulus program. If you traded Chinese equities, you remember the Shanghai Composite hit an all-time high in 2015. And this was due to all this apartment spending there. They did a big housing program to pump housing, and they were also doing infrastructure spending. Now, at the same time as that was happening, the U.S. was kind of going in an opposite direction where the amount of credit was actually decreasing and the Fed was raising rates. And at a certain point, those two policies came into conflict as far as the Bitcoin price. And by 2017, that rally was exhausted and we got the $20,000 peak. And then obviously the subsequent fall. The next cycle was the COVID cycle, driven by COVID stimulus checks, especially in the United States, which is the largest government that participated in printing money to keep people locked in their houses because of the flu. China did not participate as much as other places around the world. So this was really a U.S. story. And we all know everybody in the United States got a few $1,000s of stimulus checks. They went on Robinhood, they bought Bitcoin, they bought a car, they did all kinds of stuff with these checks. And obviously we know what happened with the 2021 $69,000 Bitcoin price. Again, driven by quantity of money increasing during COVID. As soon as the Fed started to say, hey, hold on, there's a lot of inflation, we're going to telegraph to start raising rates in March of 2022. That was the peak of the market around that late 2021 time period. So then we move to this current cycle. And if you want to think about what's the credit event of this cycle, obviously China did not participate. China basically popped their housing market and has been dealing with a deflationary environment, is not printing enough money to counter the effects of essentially the property market going down. In America, we have the reverse repo, and that is the story of this past sort of few years. Janet Yellen, bad girl Yellen, as I like to refer to her, was tasked to juice the markets. At the same time, Jerome Powell was supposedly fighting inflation. And so to do that, she engineered a strategy whereby the U.S. Treasury Department issued more short-term debt, Treasury bills, than long-term debt, Treasury notes and bonds. That drew $2.5 trillion of liquidity from the reverse repo program that was sitting at the Federal Reserve, pumped it into the markets. And that has been essentially the story of this particular cycle. That facility is now at zero. And so the question is, okay, well, we're at this time period where the 4-year cycle generally peaks. Is there another event that's going to create enough credit that's going to create a resumption of this bull market and get us out of this 4-year cycle thing? And I believe yes, because I basically read the newspaper and I listen to politicians. What are they telling us? They're liars, all of them, but it's useful to hear the types of lies that they're telling us. And so if you listen to politicians talking about reindustrialization, they're talking about my nation first. They're talking about defense spending. Do I ever hear the words, we're going to raise taxes a fuck ton to pay for all this? Generally not. Everybody's going to get something. It's not going to cost you anything. And how are we going to do it? We're going to lean on the central banks to print the money. We're going to lean on the fiduciaries to buy the debt that we're issuing. We're going to lean on the banking system to lend more to the right type of companies. And this is global. And so when you're in this Fed cutting cycle, they're cutting rates, even though the US economy is growing at something like 4% real GDP. Inflation is above their target. You have the Fed meeting, which is going to happen, I guess, in a few hours post this recording, where it's anticipated that Jerome Powell will stop quantitative tightening, and everyone expects quantitative easing to start at some point in the near future. China is talking about how they're going to support markets, whether it's a housing market or particular types of industry. So credit growth is going to grow in China. Japan, the new prime minister, I can't pronounce her name correctly, so I'm not even going to try. She is talking about printing money to help households pay for goods and services because of the high inflation that was caused by the printed money of the previous administration, who she loves, Abenomics. So they're printing money in Japan. And then the ECB is going to have to print more money to save the euro. So again, all around the world, the politicians are going to print more money. And so I see it as a completely different scenario than, let's even talk about 2021, when Jerome Powell was talking about tightening credit, when every central bank was tightening credit because of inflation. We are in a scenario where the politicians around the world, regardless of where you live, are talking about spending more money without raising taxes. And so that's why I believe that this particular cycle will extend. I think it's going to extend into 2027, 28 time period. But again, who knows how long it will go for. But as long as the politicians are going to print money to hand out goodies to people to support them, we're going to keep going higher as a crypto ecosystem. So that's sort of my essay in a few minutes.
There's a lot to go on there. Yeah. Just to quote Lynn Alden, I believe it's nothing stops this train, this deficit spending. And what you've elucidated there is quite interesting because it's a theory that I've seen played out, or many people have posited in the crypto space around these unique circumstances that have come every few years that come together in confluence that leads to an increase in liquidity. And that then debunks the theory of the halving has anything to do with it. So you think as well, the halving is just coincidental and that there's no real impact on the price of Bitcoin.
I'm sure there is, but the more halvings we have, the less impact it has because the inflation rate, the delta in the change in the inflation rate is much less. So yes, of course, the first halving meant a lot. The subsequent on the fifth halving, whatever it is, means much less.
Less impact in total. So now then coming back to this cycle, if they're going to be extended because it's not following the 4-year metronome of a cycle, do you think that there's going to be a blow off top or is there going to be a super cycle?
Oh, this is going to be obviously absolutely blow off top.
Absolutely.
We're humans.
Okay.
We haven't changed. Okay. Just because we have this new thing called Bitcoin and crypto doesn't mean we're not a bunch of retarded animals, pressing buttons.
Well, I mean, there's a lot of people still talk Supercycle, man. There's some Bitcoin maxis out there who still think so.
I'm sure Jew still talks to Supercycle, any retard dumb enough to give him money.
True. Okay, then. Well, coming back to our previous interview we did in May, and you said Bitcoin would hit 999,999 by 2027. So are we still on track for that?
I think so. Absolutely. I read the newspaper and the politicians tell me what they want to do. They want to print the money. And so as long as they want to print the money, I'm going to hold the Bitcoin.
There we go. So, I mean, hopefully the cycle, then if it's going to be a blow off top before then, or it's going to go and it's going to blow off top will be 999,999.
I hope so.
That's
maybe it'll be higher. I don't know.
Yeah. Okay. You also said in that interview that Bitcoin would start decoupling from Nasdaq and act more like gold. But increasingly over the past few months, we've seen gold kind of like diverge from Bitcoin in terms of price action. At least the last week, not so much. But what are your thoughts then on what's been happening now on this whole question around what is Bitcoin? Is it a risk on, risk off, somewhere in between? Is it just this idiosyncratic asset that has like an identity crisis every cycle?
So I think we need to talk about flows and who is the marginal price insensitive buyer of a crypto asset or of gold, right? And talking about gold, the flows that have been driving the gold market, and I don't have charts here to show this, but there's a great chart, I don't know who produced it, and it shows the shares outstanding of GLD, the large US listed gold ETF fund. It holds physical gold, supposedly. And it shows the gold price. And essentially the gold price tracks how many shares outstanding. When more people feel bullish about gold, people being Western wealthy investors, right? Then the shares outstanding increases, the gold price goes up, right? But since February 2022, there's been a divergence. Shares outstanding of GLD have fallen, but the gold price has almost tripled since then. And what happened in February 2022? Russia invaded Ukraine. Debating on your politics, you either agree with that or don't agree with that, doesn't really matter. The salient point here is, what did the US empire do in response? It stole Russia's money. Now, the US steals people's money all the time. This isn't anything new. If you're North Korean, Venezuelan, Iranian, there's lots of people who've gotten their money stolen by the United States government. However,
people who pay taxes would agree.
stealing money from the nuclear superpower, the largest commodity exporter in the world, and one of the largest weapons producers in the world, is an extremely different proposition from stealing money from a bunch of poor countries that don't really matter. And so this was a wake-up call to anyone who manages a sovereign portfolio, whether or not you are aligned with the United States or not. You know that you are one decision away, one particular, treasury official or government official that's, whichever administration, away from not having access to your savings. Because what are all these treasuries that these countries own? It's essentially, I exported more than I imported, and I had to save this in some way, shape, or form for the future to buy commodities, to buy goods and services, right? And so I saved it in treasuries because the dollar is a reserve currency. All the marginal oil exporters all sell their oil in dollars. I need energy, therefore I own dollars. I buy treasuries. Cool, makes sense. But if I'm gonna wake up one morning and all of a sudden property rights mean nothing, And some politician decided they didn't like my country or me personally for whatever reason. And now all of a sudden, I no longer have access to my nation's savings. And now I'm thinking about, oh, well, how am I going to afford medicine and oil and foodstuffs? That's a fucked up situation. And so, how can you continue to stockpile treasuries as your savings when you know this could happen to you? If it can happen to Russia, it can happen to anyone. And so, what we've seen since February 2022 is sovereign nations hoovering gold. China, Singapore, these are the types of places that are like, okay, well, we have a massive surplus. Why own treasuries? We're going to own less treasuries than our trade imbalance would suggest we otherwise should own. Let's buy gold. And that's been the story of gold. So it's not an inflation story. It isn't a debasement story about the dollar. It's a, oh shit, what happens if the US does to Russia, does me like they did Russia? And so therefore I need to buy gold. That's the story of gold. I think since the summer, this story has gotten even a little bit more pronounced. The big event that in my theoretical analysis, is the bombing of Israel to Doha was a wake-up call to the Gulf. Supposedly, if you're a good little boy and you priced your oil or your natural gas in dollars and you bought your treasuries and you bought the U.S. military equipment, then America's attack dog Israel wouldn't fuck with you. For Israel to bomb Qatar, the largest gas exporting nation in the world, and the United States either knew about it or didn't know about it, doesn't really matter. It just means that they can't control them. Then that's not good. Why am I kowtowing to America, which is unpopular with my people, and selling my energy in this currency that's deflating at 8 to 9% per year, subject to seizure whenever some politician in the United States feels like it for domestic political points, and I'm getting fucking bombed by Israel? Why do I own this shit? I see that as one of the major events where we're like, well, holy fuck. Number one, I need to have a new security partner. And you saw that with Saudi Arabia and Pakistan signing a pact. Number two, I need to start thinking about selling my oil in other currencies. And obviously, this is a trend that's been increasing. We saw the love fest in Tianjin. I think that was where the BRICS summit was, between President Modi, President Xi, and President Putin. The Siberia 2 gas pipeline deal was signed between Russia and China. So these countries are like, number one, I shouldn't sell my energy in dollars. I should sell it in gold or some other national currency. And number two, I shouldn't buy treasuries. I should be buying gold. Because number one, I'm getting bombed. And number two, I get my shit stolen. What's the fucking point? And so that's the gold story. And I think Bitcoin is still a credit story. And we'll see what happens with the Federal Reserve meeting today. But I think this recent drop in Bitcoin was more a wake-up call that there's a tightness in credit in the US money markets. If you take a look at the secured SOFR, secured overnight financing rate, which is essentially a tri-party repo general collateral issue, you can get the details if you want. That rate should not be trading above Fed funds. The 75th and 95th percentile of awards on those rates on certain days have traded above Fed funds. The standard repo facility, which is basically the Fed's ability to inject cash into the money markets to make sure they function properly, has been activated in meaningful sizes and over the past weeks. So money is too tight. The ample liquidity has vanished from banking reserves. That's why the Fed's going to stop QT. It's a quantitative tightening or balance sheet runoff at sometime soon. And I think Bitcoin is sort of just reacting to that, saying, okay, there's tightness of dollars. That's why it dropped, 10, 20% off of that, either the Trump-China tariff thing, right? That's at least how I read the situation. I think that Bitcoin and gold will trade on the same sort of dollar debasement inflation story at some point. But right now, sovereign countries are not buying Bitcoin. They're going to buy gold. They know what gold is. They know that gold has been used to trade between countries since we've been in, for thousands of years. They're not going to lose their jobs buying gold to buy the medicine and the oil and the goods that they need from other trading partners. They could lose their job if they bought Bitcoin and it went down 75% and they couldn't buy what they needed to buy. So retail people like me, we buy Bitcoin. Sovereign nations buy gold. I own both. Distinct reasons, but they'll sort of blend together at some point. Why you should own both?
Well, it's interesting because I don't know if you know the story, but about 2-3 years ago, Nicolas Maduro, he held a shitload of Venezuelan gold in the London vaults. That's important. If you're going to be a sovereign and you're going to buy gold, to hedge yourself against getting your assets expropriated, make sure you hold the asset yourself, gold.
Yeah.
Whereas, so the London vaults, London seized his gold, or the UK seized his gold. So yeah, make sure that, and this is probably an advantage of Bitcoin that governments don't appreciate or sovereigns don't appreciate, is you can easily send it and hold it yourself, self-custody it, $2 billion worth of gold, and you've got to make sure you've got access to that. But it's really interesting the way you break it down in terms of the different forces driving gold, especially the fact that it's not a debasement trade. And it's also like, I believe, in terms of oil trade now, Saudi Arabia and China have actually engaged in yuan settled oil trades, which is also monumental in terms of global geopolitics. Moving on then from the Bitcoin side and the macro side, I just want to start with a bit of an altcoin discussion. And so basically, recently, you sold your hype for
Yes.
two reasons. One was concerns about the unlocks that were coming up, and two was for a down payment on a Ferrari Testarossa. So, so my first question is, when does the Rari arrive?
I don't know. So I said that bit of tongue in cheek. My dealer sends me the new specs. I'm like, this looks cool. I want one. I'm like, okay, dude. Well, how much is it, and when is it delivered? I don't fucking know yet.
So you just down payment,
they'll
that's
send me
it,
the price
whatever.
list and whatever. I'll buy one, but
Get on the
no
waiting
idea.
list, man. You got to get on the waiting list.
Well, I'm not gonna be on the. I'll have the first one whenever they ship in Singapore.
Yeah.
But like,
Okay.
I don't know when that's gonna be.
And then, of course, you have to pay the taxes on top of that, which are probably like double the price
No,
of the car.
I mean,
So you need to sell
owning
even
a
more
car in
hype for that.
Singapore is silly. It
Yeah.
just doesn't make any sense. It's purely a vanity for fun project.
That's true.
There's no need.
That's true. But my second question is then, now you referenced this unlock as the sort of Damocles and all that, and Maelstrom actually did a post on this. But will you buy back post unlock? Because I think it's November when they start, but it goes on for quite some time. So would you consider getting back in?
I want to know where the market's going to price the forward earnings of hype. Now, obviously, you'll never know that, but like we had a particular forward multiple phase scenario thing. We have a new one. I posted a chart, I think maybe last week from Dune Analytics, and it had annualized 30-day revenue annualized of hype and the token price. And what you saw was a pretty well correlated chart. When one went up, the other went up. But recently, we've had a divergence where the annualized revenue is reapproaching where it was, I don't know, a month and a half ago, whenever it was. But the price is sort of sagged, which means there's a multiple compression. The market believes that we should not be paying as much for future earnings of hype, which is fine, because there's two. Obviously, people forget that there's two components of a return, two major components of a return for a token like hype. There is purely like, okay, it makes more money, and how much am I going to pay for that future revenue stream? 10x, is it 20x, whatever it is. So what has happened, right? There was the whole lighter and ass are going to take hype's lunch. You saw revenue dip. Probably people were farming airdrops. The lighter airdrops coming up. There's all the relevant sexes are doing their own thing. But then the revenue climbed back up. Maybe tiers of, hey, I really like Hyperliquid. I'm happy paying more than somewhere else. But I'm not getting compensated as a token holder. Hype should be trading at 60 plus. Now it's at like 49, 50, given where the revenue is trading or where it traded in the past. So there's multiple compression. I think there'll be further multiple compression once the unlocks actually happen. Everyone's like, oh yeah, Jeff is this really great guy. He's going to make hundreds of millions of dollars every month and he's not going to sell any. I don't know if do we not believe we're humans? Like, he could be the greatest guy in the world.
Everyone wants a Ferrari, bro. Everyone wants a Ferrari, man. Everyone wants a Ferrari in Singapore.
Dude,
Let's be
Singapore
serious.
is fucking expensive. Homeboy probably wants a new apartment, get a nice house, buy a car, travel around the world, whatever. Do whatever the fuck he wants. But like, to sit here and assume, oh yeah, Jeff is never going to sell any of these tokens. These teams are never going to sell any of these tokens. It's complete like nonsense. They might not sell 100% of what they receive, but they're definitely going to sell more than zero. And I don't know what that is. We'll see what happens with the flows once this unlock happens. And then we're going to reprice the forward earnings of hype. And how well are they going to keep people in the ecosystem with HIP3 and some of the other apps that are on Hyperliquid versus all these low to no fee perp dexes? Again, open question. I don't know. I want to see where the market prices those forward earnings. I'll absolutely buy back into hype at some point in the future. The question is when and at what multiple?
Yeah, it's a good point. I'm looking at your tweet now, and I think this came after your thesis, Maelstrom's thesis on the unlock. So multiple compression as a result, of course, of the competitors. So I'm curious then, do you have any thoughts on any of the Hyperliquid competitors? I mean, you've got like you mentioned,
I'm an
Asta,
investor in Lighter, so I hope they do really well.
Okay, Lighter, but like Asta, Edgex, there's a few others that are raised now. Like, so you're obviously bullish on Lighter, but do you think that these perp dexes actually have the potential to eat into Hyperliquid's market share considerably?
For sure. But again, it's a question of how well they play the games with, token issuance, buybacks, all that sort of stuff. Like, every trader wants a new shiny toy. Lots of people saw hype. I think what did hype list of like $2 or $3, and then it ran up to 60. right? Everyone's like, oh, there was no altcoin season. Yeah, there was. Hyperliquid. I'm sorry you didn't know any of it, but like, people made a lot of money on that, and now they're like, okay, perp dexes, they're the thing now. Let's go and farm all these other ones, and none of them are going to do as well as Hyperliquid, probably most likely in terms of price performance. But yeah, there's definitely situations where you can 5 or 10 extra money, farm it the right way, and get in, all these sorts of things. And so that's going to be a near-term sink of trading activity. Now, how much that is, I don't know. We'll see how well these platforms are built relative to each other. Again, I'm not an engineer. I don't know. All I know is I invented the perpetual swap. It's all the same product essentially across all these platforms with some minor tweaks. There's nothing new that anyone's offering. It's whether it's just data availability, how much they sell this decentralization meme, which none of them are actually decentralized, or just AWS instances running their order books, and then some on-chain settlement nonsense, right? That's all the same. So again, I'm sure some of them will decentralize over time, and that's always the goal. But again, I don't think there's that much difference between any of these things from my 30,000 feet view. But that doesn't mean that one's not going to outperform the other massively. Again, I just want to wait and see. I'm in no rush. I took a profit, and this is a long-term game. I think perp dexes will massively take a big chunk out of SEX trading volumes in the 3 to 5 year period. I hope Hyperliquid is the one to win that bet and validate that like 126x presentation I gave on stage in Tokyo. But secularly, this perp dexes will be a thing. Whether or not Hyperliquid is the number one, I don't know.
Have you used them, or you just invested in from a thesis, from like an investment thesis, or have you actually used some of these ones and compared the
I have not
UIs
used
and
any of them.
functionality? Because I think, Hyperliquid's Asta's not so much of a strong competition when it comes to the UX and UI, my personal opinion, but EdgeX and Lighter definitely are. I'm coming back to a point you raised there in terms of the market share that perp dexes could take from sexes. And I'm curious then, one, do you think there could be any sort of possibility in the future that perp dex volume and OI could ever flip that of sexes, A? And then B, in that environment, what's the future of sexes as the co-founder of one of the most well-known sexes that invented perp dexes and perps itself?
The big issue between a sex and a dex, at least in my mind, is who pays for security. So in a sex, we all pay a lot of money for security. We have to keep your crypto safe. And to do that requires spending a lot of money on physical infrastructure and human capital, like security team. These engineers are fucking expensive. And I can imagine, I know what we spend at BitMEX. I'm sure it's multiples of that at Binance and Bybit and all the other exchanges, because they're much larger than we are in terms of trading volume, and have more clients and bigger wallet balances sitting on them. Now, to the customer, they're like, okay, there is a perp that trades on Bitcoin dollar. I can trade it on Binance, Bybit, okay, BitMEX, whatever. I can trade it on Hyperliquid, Aster, Lighter, whatever, right? And there's a fee. Roughly, the fees are about the same right now, with 2-3 basis points if you want to take order. But on the SEX, I got to pay for security. And you as a customer you assume, hey, I'm putting my money on Binance, it's safe. And if it's not, C's going to pay me, or Ben's going to pay me, right? And pretty much has happened. They're paying the same fee on a DEX, but the DEX doesn't pay for security. The layer 1 or layer 2 pays for security. You pay an additional gas fee or sequencing fees to this other thing that you don't conceptualize as being the fee to trade. And so the DEX has a better business model for the way that the customer thinks about how they're paying for it. And they don't have to worry about security. That is Ethereum's problem, right? It's not Hyperliquid's problem, or Optimism, or Arbitrum, or whatever that these, or their own chain, whatever that they're using, which is essentially usually a derivative of Ethereum or Solana or whatever. So that's the biggest problem with owning a SEX, is the customer doesn't realize all the value of services that we're providing and how expensive it is to provide these. And that's why we have to charge a commensurate fee, whereas the DEX doesn't. So I think from the retail perspective, they're going to move towards DEXs because they're going to be more flexible, ultimately cheaper in their minds, and available to anyone who wants to trade, any type of product you want to trade, all that kind of stuff. The SEX is going to look more like a shitty brokerage app, more and more and more and more. And that just means that you're going to be trading against Citadel and Virtu and all these other major people. And I think that's going to be more of a institutional market. People who can't trade on chain or don't want to trade on chain, they're going to be in the SEX bucket. That's still a massive business, obviously. But I think in a crypto perspective, where we're all used to trading whatever we want, whenever we want, wherever we're seated, that retail energy is going to move to the DEXs. And in aggregate, I think DEX volumes will surpass SEX volume, because crypto is a retail-driven phenomenon. It's not an institutional-driven phenomenon, even today. And that's sort of my longer-term view. So that doesn't mean that the SEX is a bad business. It's just that its trading cohort is going to look more like anyone who trades stocks on a national stock exchange versus, any crypto muppet who's sitting in their parents' basement, slinging meme coins.
Interesting. Your theory on the security costs on centralized exchanges, it is, I wouldn't want to question something there. It is true that, yes, okay, they have the lot larger wallet balances and they have centralized infrastructure, could be a central point of failure. But on DEX side of the security isn't just on the layer one itself. I would assume also the smart contract risks and all that other stuff. And they would still also need some very advanced engineers to be able to audit these smart contracts. So do you think that there are potential risks that exist with these perp dexes on the security side that you don't really see?
If you've coded a bad smart contract, and maybe bad's the wrong word. So smart contracts are usually exploited because somebody executes them as they were written. So you wrote it, you just had a certain intention for what it would do, and it did something else. It's not that there's a lot of malicious, and some people have, unfortunately gotten into legal trouble for executing smart contracts as they were written. And people say that is fraud. I have a different view on that. I'm more of a free markets guy. If you wrote a smart contract and, like in the DAO hack and back in the Ethereum lore, that guy's not a hacker to me. He just is a user of a smart contract. He just use it in a different way. And so,
Eisenberg? Is he guilty?
Yeah.
I mean, talking about perp dexes and shit, bro. Okay, we've obviously gone on to the sex versus dex topic right now, which is really quite interesting, especially in light of what happened on the 10th of October. A massive liquidation event. So it was crazy, Clearly, the ADL mechanisms, which is the automatic deleveraging, which you guys no doubt know a lot about, caught lots of people off guard and completely wrecked many people and traders. And I'm speaking to people post event and people in the industry as well, like trading volumes have completely collapsed, liquidity's thin, market makers were hurt. So what are your main takeaways from that event?
Read the fucking docs. ADL is not new. Huobi created in 2014. I don't know if they called it ADL back in the day. I think we coined the term ADL. Maybe I didn't. Someone can correct me if I'm wrong on that. In 2016 or 17, whenever we adopted it. But come on, guys. This shit has been written about for almost over a decade. Yet nobody fucking read the docs. Yes, the marking mechanism could have been improved at Binance, where someone was able to dump all that USDE and a few other stables and cause those multi-margining system issues. But again, it was documented. It wasn't like Binance lied and said, we marked it this way, but in the back end we marked it a different way. Everyone knew how it was marked. They just didn't appreciate the implications of what they made. Obviously, somebody did because they made a lot of money in exploiting that. And obviously, I've heard some rumors about people got bad fills in ADL and API issues. And okay, put that aside, as I'm sure there are some individual exchange issues with connectivity and how these systems worked under stress. But at a macro point of view, if you didn't understand what ADL was, if you didn't understand how these derivatives, these exotic derivatives were marked and how the margining system worked in the exchange where you had your collateral and you wake up and you lost money, I'm sorry, I have no sympathy for you. Now, I know that's not a very popular opinion, but I just don't.
Kind of harsh for the guys out there like doing all these exotic trades, like trying to farm on different perp dexes, and then they get stopped out of their short. They get closed out of their shorts, and then they get wrecked on their longs, and then they get. Right. Also, the other thing was cross margining. They didn't really note they were cross margining across different accounts, and the alts collapsed all at the same time. Yeah, it's interesting. I think that crypto will evolve, and people will learn from this experience. I guess how long it takes before we get back to the same levels of open interest and degen leverage traders. And
open interest on that will take. I don't. Maybe I'm looking at the wrong chart. I think I looked on CoinGlass, and I don't believe open interest in the aggregate. Maybe this is just Bitcoin. I'm not sure what the chart was. Is not Bitcoin, down. Yeah. Is still above where it was post the U.S. Liberation Day tariff situation in April, right? So open interest dropped absolutely. But I think obviously the carnage was very localized in the alt space where these things were down 80, 90% at some point, right? I saw some interesting tweets about
99%.
That's the actual value of the dog shit token that you thought was worth 10x more. When you removed all this market maker
liquidity. You're telling me Atom was really worth $0.01 or something like 1 cent?
Yeah. When was the last time you used Atom for anything?
That's true. Wow. Shots fired. Okay. It was a crazy time. Anyways, sticking with some altcoins. In the past, you were one of the earliest investors and proponents of Ethena's Ethena, which has had another storming rally over the past few months, although it's come down quite significantly. And I believe prior to the Hyperliquid vote, you announced that you were buying back into Ethena. Is that correct?
I don't know when that was, but I mean,
Okay, I think that was the Hyperliquid USD stablecoin vote was sometime like 2 months ago, whatever. Do you still hold Ethena, position in Ethena, or?
Yeah, I mean, it's our largest position in the fund.
Okay. My question then is, it had a crazy past few months. It reached highs of like $1.30 and it's fallen over 60%. So I'm curious, like, do you think it can recover? And what's your outlook for Ethena and Ethena going forward?
So I'm super bullish on Ethena, obviously because of the stablecoin narrative. I think there will be three major issuers: Tether, Circle, and Ethena. I think Ethena will take over Circle as the number 2 spot. I don't think anyone's going to be coming close to touching Tether. Obviously, Tether and USDE are different products, essentially. Like one is dollars and treasuries in a bank account. The other is trading basis yield within the crypto ecosystem. But that being said, I think obviously I wrote a essay about $10 trillion of the stable coins. Whether or not that's true in terms of the absolute number, who knows? But I think the direction is correct. It's going to be much larger in a few years' time than it is today. The banking system will look completely different in terms of how we as customers access money flows on digital rails. And Ethena is going to be part of that. Now, the problem with Ethena, and this is something that I tell the team all the time, but again, I'm an advisor, so fuck, have to listen to me, is that they need to buy back the token. They make money. The protocol makes money. And we, the token holders, need to see some love. And I think, they're receptive to that. I think they will be rolling out a plan on how exactly they're going to buy back tokens and what percentage of revenue and all that kind of stuff. And once that happens and people see on chain, oh, yep, they're buying it. They made this much money as a protocol. Here they are buying the token. That's one thing out of the negative corner for Ethena, right? And that should cause a re-rating of that future revenue curve. The second thing is, as interest rates come down, and I believe that globally interest rates will come down, the revenue to players like Circle and Tether goes down a lot, right? Essentially, that whole net interest margin is just what is a 6-month treasury bill yield, and you can pretty much understand how much Tether and Circle are going to make. But the lower interest rates go, the higher crypto goes, or the higher any long infinite duration asset goes, tech, crypto, whatever, equities. And if people are going to pay more to get long crypto, they're going to bump up the basis rate. And the higher the basis rate goes, the more income, net interest income Ethena has to clip as a protocol. And the higher the circulating supply of USDE will go, because people want to earn that higher yield than they're getting in a treasury bill, for example. And so I think this rate cutting environment will allow Ethena to differentiate itself from Tether and Circle, because while Tether and Circle's income net interest margin will decline as Fed funds declines, Athena's will grow as investors globally want to own the asset that does own an infinite duration asset that does better because the discount rate is falling. And so that's why the two structural things I believe are going to drive the Ethena price higher.
Yeah. I think also, coming back to your point around buybacks, I don't know where there was a Wintermute proposal like last year sometime for a fee switch mechanism. I don't know if that's passed the governance yet. So, because they do have unlocks, they have regular unlocks, right, which kind of like are potentially also drag on price. So that's a good point.
But that the schedule is known. This is nothing new. So I think there's a certain amount of unlocks every month, whatever that number is. I think we're more than a year into that situation. So the question is, okay, how much buybacks could happen? Can you nullify that negative issuance or sort of unlock effect by saying, the protocol is buying back so however many millions of dollars of tokens every month?
I'm curious though, also regarding this around the yield strategy and the strategies that people have been doing, especially loop strategies through Aave. So using Aave and the USDE looping strategy. And there was a report recently, I don't know if you've seen it, from Centaura Research. They basically explained how this looping strategy has waned in the aftermath of that mass liquidation event. So potentially some negative carry if you're involved in this looping strategy through Pendle and Aave and all these other DeFi protocols. Do you have any thoughts on that?
I've never done it, so I don't really understand the mechanics of the trade, but I'm assuming that's like Aave must trade at a lower rate to borrow dollars, and you can lend them effectively to Ethena or USDE by staking it. I'm assuming that's some sort of flavor. Yeah. And then you have to manage your collateral risk properly. So I think probably, and this is, I'm not an expert on this flow, people did these looping strategies without really thinking about collateral usage and what their actual real return was. If they actually kept the amount of margin to be safe and comfortable in this position without having an event like I think October 10th, whatever date it was, happen them and take them out of their position. If you solve for that type of dislocation in how much margin you need to put on one of these looping strategies, what is your effective rate of return at that point? I don't know that calculation. I'm assuming that as traders start to actually run that scenario, it's like, okay, well, I needed to have kept so much more collateral to be safe. And obviously that negative situation has scarred their investing memory that they're going to solve for the last crisis. Then the strategy might not be that appealing, or it might not actually make money when your collateral that you have to hold in different places is bumped up to such a level.
So coming on to another one of your most recent calls, and this was on Zcash's ZEC. And you recently said ZEC to 10K. Wow. Okay. So first question, do you really think that can happen? What's the time frame? And second question, what's your view on the whole resurgence of privacy coins in general, the meta?
So, I remember being deep into Zcash in 2016 because it was the newest, hottest thing back then. Privacy, cryptography, zero knowledge proofs were really coming to their own in terms of a narrative. And I think at BitMEX, we listed the first market on Zcash before the Genesis block had happened. And I remember it was a futures contract. I don't remember. It wasn't a perp. I don't think it was a perp. It was some funky futures contract we created
Pre-future, pre-listing, pre-TGE futures contracts.
Yeah, and it's for us at the time, like insane volumes. I remember I was at a bachelor party for a friend in Tokyo. I really fucked up that night. I wake up in the morning and my co-founder and the other guy who was head of markets was like, dude, Zcash overnight was insane. I think it was the day that the Genesis block listed. It had traded at something like $3,000 a coin on Poloniex or something, and like the assumed FTV was like something massive, right? And then obviously as blocks started getting produced and supply started to increase, the price dove, right? And one of the big issues with Zcash back then was this trusted setup issue. Like, did you trust that Zuko and the gang did this correctly? They put the laptops under their pillows and did all the fucking theater, but did they really do it or not? You had to trust them essentially. But essentially, I think it was the Halo 2 upgrade recently removed, or maybe a few years ago, removed that trusted setup issue. Obviously, I believe in privacy coins. I believe it's something that we should have. I think Bitcoin being pseudonymous is actually a good thing because I want to be able to track Bitcoin, but I also want to have internet cash where there is no traceability of that. And obviously, Monero was the thing that held that mantle for a while. But apparently, I read up the story, the Japanese authorities were able to de-anonymize Monero by supposedly linking together different disparate parts of some information and figuring out who owned what and who did what on the Monero network to catch some criminal gang doing something in Japan. So yes, criminals should do bad things. We don't want them to do bad things. But again, if we're talking about super safe private money, then we don't want the government to be able to utilize the even greater computing power of AIs who can form patterns that we can't even think of to de-anonymize some of these networks. And so, I was sitting at a dinner during Token and next to Naval, and he started shilling me on Zcash, and I was like, well, fuck Zcash. And I just tried all the things of why I thought it was a piece of shit, from my memories of 2016 era stuff. And he just kept knocking it down. So no, look at this, look at that. So, okay, cool. You obviously are a very serious investor. So I just bought a few $1 million on the spot at that point. I'll do some more research afterwards. A few days later, I started, going through the history, reading up on what has changed in the protocol since then. I downloaded the Zashi wallet, tried out the near intense thing where you basically can shield your Zcash and then swap it for another coin. So when you do that, it's essentially like Tornado Cash on steroids, right? Because essentially your Bitcoin appears, but it's not linked to anything other transaction or Ethereum or whatever, right? And you can do this all in the Zashi app. It's definitely not cheap yet, but I'm sure it'll get better as more people use it. The amount of shielded transactions is approaching, I think, 30%, up from like a few percentage points when I cared about Zcash a long time ago. I was like, okay, cool. I get the narrative. I think this is a thing. Obviously, as people understand what Bitcoin is and, the not nice things about having your transactions public, this Zcash thing makes a lot of sense. The next halving is coming up in a few weeks in November. And so I was like, fuck it. I think that 10 to 20% of the value of Bitcoin quite quickly is something that Zcash could achieve. There is your $10,000 to $20,000 price target on Zcash. And so I bought a lot of it. Not gonna tell you how much, and I'm still buying it. I think that this is probably going to be one of my better trades of the cycle. It already has been, even though I bought it after the fucking 80% pump when Naval sent out that tweet.
Yeah, well, I mean, that was still then. It was probably like only about $100 or something, right?
$120, $130, something like that.
Yeah, so still a decent return for you, man. Yeah, I kind of agree. I mean, the privacy coins are needed in an age of digital surveillance and all that kind of stuff. But I guess also now it's like if the government really wants to restrict the use of privacy coins, like and wants to basically control exchanges, fiat on and off ramps, and all that kind of stuff, a big opponent, a fearful opponent in the
Yeah,
government
but
side.
again, at the end of the day, right? If we believe in this on-chain architecture, then surely, okay, cool. Maybe you can't buy Zcash on pick your domestic large centralized exchange, and you basically can't. I remember that night. I was like, okay, cool. I've got like 8 or 9 OTC brokers, and I was like, "Burp." Okay, give me a price. I was just gonna lift them all and just to see what the fuck they were doing. Only 2 brokers would quote me Zcash out of 8. So it's not easy to buy this shit yet. And so, but I think that if the price is high enough, then people understand and believe in the narrative, then okay, well, I can buy it on one of these decentralized exchanges, and that'll be how you really get access to and that's how you should get access to Zcash. Just like how Bitcoin was back then. Of course, there wasn't decentralized exchanges, but it wasn't easy, and you had to believe in a future that doesn't really make a lot of sense right now. But that's how you make 1,000x.
Yeah,
If you want to
that's
make real money, then you got to take the fucking risk. So again, this is not
yeah,
a slam dunk by any means, but I like the asymmetry in the trade.
yeah, makes sense, man. So just quickly moving on to altcoin sector more broadly as a whole, and I know that there's crypto influencers have this idea that altcoin season. If you stand in front of a mirror and you say altcoin season 10 times, it'll magically appear. So I guess I'm curious then now what your view is on the whole concept of altcoin season. Are we going to have this massive rally in broad alts, or is it just going to be localized and focused on specific niches and narratives?
I mean, every altcoin season is its own narrative, right? So we started out with ICOs, just put something up on the fucking internet on the website and take some money and launch a token and it trades, right? And that did well for a period of time. Then we had DeFi summer, right? Where you were farming Compound and Aave and all the funny stuff that we were doing back in the day to basically like do all this non-economic stuff to generate these tokens that pumped and then dumped. Okay, cool. That was altcoin season 2. And I think this cycle we had project, we've matured project with, real customers that spend real money, and real money is a currency other than the intrinsic token of that protocol. And the protocol takes some of that money that they make and they hand it back to us as token holders. And the best example of that is Hyperliquid. So we have altcoin season. It's just, did you understand the meta narrative of this cycle, and did you participate? And that is a question I think a lot of investors didn't. They wanted the easy one. Oh, it was so easy back in 2021 to just do these farms and make all this money. It was so easy to just send some money blindly to some fucking website and hope that you were able to get your transaction in on the Ethereum blockchain at the time, which was super bloated and difficult and all. Like, having been in all the altcoin seasons there ever have been, it was never that easy or that like, oh yeah, everyone's just going to start making money. It's just people look back and say, oh, it was so easy. Either they weren't there or they have a very rosy memory of it because they made a bunch of money. But it wasn't easy at the time. It wasn't, oh yeah, this just makes a lot of sense. I should be doing this with my entire stack because this is how you make the most money in the cycle. No, there was always an issue, always a wall of worry to climb about what you were doing that didn't make any economic sense, but people were making money. And so I think that is present in today's altcoin season. It just doesn't look like the ones in the past. And then the next altcoin season won't look like this one. So we have to be flexible, just like the 4-year cycle. Maybe it's a 4-year cycle, maybe it's a 6-year cycle, maybe it's a 3-year cycle. Like, stop saying it has to be this way.
Yeah, that's interesting. Two of the biggest components of altcoins and of the whole altcoin complex then are ETH and Sol, and as just given by the nature of their market caps. So
I mean, Sol went from 7 to 280. Were you there? Right? Like, that was altcoin season to me.
Yeah,
like,
exactly.
That was a great trade.
It's altcoin season if you're in the right coins. Yeah, exactly. Yeah. So it's like, it's not so much NGMI for those still holding like last cycle bags. But just speaking about ETH and Sol quickly, back to our interview in May, you said ETH would hit 5K before Sol hit $300, and ETH came very close to that. But Sol is now trading just below 200. I mean, do you still think that that's this concept? ETH 5K before Sol 300?
Yeah. What is the new pocket of activity for Solana? Because it's not meme coins. That's done. I mean, people are still trading meme coins for sure, but it's not the same sort of ferocity that it was, a year ago. So what's the new thing? I don't know what it is. Maybe there'll be something, and then my prediction is completely wrong. But Ethereum has been the dog for a very long time, and I think the ETH thing is now it's stable coins, it's TradFi using public blockchains to do stuff. It's digital asset treasury companies like Bitmine coming in and buying lots of tokens. I am an advisor of a Solana digital asset company, UPXI. But if you to be intellectually honest here, if you look at the entire ecosystem of Solana DATs, they have not performed as well as the Ethereum DATs, and I think that is a lack of a broader narrative of why Solana over Ethereum. The meme coin and post FTX, like this is not just a Sam coin. That made sense, and obviously it makes sense in hindsight. But yeah, it makes sense. It fits. I think this new ETH narrative on sort of the TradFiification of certain sectors of crypto is going to happen on ETH. It's not going to happen on Solana. And that is the message that Tom Lee and others are banging the drum on day after day after day in the Western financial markets media outposts to convince Western investors that this is how they should view Ethereum. I think that's largely going to be successful in terms of propelling ETH faster upwards in Solana. Now, don't get me wrong, they're both going to go up. It's just a question of which one goes up faster.
So ETH SOL ratio is going to continue outperforming.
I think so.
Got it. So just quickly moving on to something else you guys are working on, quite recently announced. Your family office, Maelstrom, is raising $250 million to acquire non-crypto firms, non-token crypto firms.
Correct.
So what's driving that shift in strategy?
So obviously it's just another pillar of the fund. It's not as if we're all of our eggs in this particular basket, but we've identified a situation that we think we have a unique ability to execute on, which is you have these companies that make good money. No, nothing crazy. These are not exchanges, but these companies produce technology or products that we all use or companies use in their quest to becoming a crypto relevant entity. And these companies, these founders have been at this for a while and they want exits. And we believe that giving someone cash on the table and saying, hey, go off in the sunset and enjoy the success that you've done. We're going to use our network to bring in different caliber of operators to take this business to the next level that'll be suitable to either selling it to a large private equity firm like a KKR or Apollo, or, we do some sort of public markets transaction. But that's not the sort of DNA of a company that these early founders have built. And the VC landscape is mostly people who do, early stage checks. It's not an operator type business. I believe that our Rolodex, specifically, the people that I know from my 12 plus years of doing this, if there's a business, I have a Rolodex people I can call. Hey, I think this person could run that. This person run that. We can put these people in place, give them a great payout if they perform, and we can buy these businesses at an attractive multiple and deliver great returns for our LPs.
Got it, man. Fair point. So just quickly finishing off on two quick questions around, you've built a career, and this is kind of like, interesting questions in terms of you personally, but you built a career out of being early and loud on big calls. So what's the dumbest trade you've ever made that still makes you wince?
Ooh, I bought Pump.Fun after the recent TGE, right? So, we waffled on getting into the VC round. We didn't ultimately do it. I thought the market was favorable in terms of at least having a good run. Was it this summer that happened? Put a decent size position on, and I wrote that shit down 50%. It hurt.
Really?
The great thing about Maelstrom is like everybody's trades are in the chat. Like I have my own book. Some of the other traders have their own book. We disagree on shit all the time. Like some of the juniors are like, what the fuck are you doing? Like this pump thing is complete dog shit. Like, no, this shit's going up. And, I got smoked. You take your losses, take your L's, whatever. Learn your lesson.
Cool, man. So if the Pump.Fun FOMO caught you, man. The meme,
yeah.
The trenches won that time, bro.
I'm a shitcoiner, man. I in my heart.
You were exit liquidity for the trenches, bro.
Yeah.
How the tables have turned. Cool, man. And one more question. So if you weren't doing this, the writing, the investing, the tweeting, what would you be doing instead? What's your alternative universe Arthur Hayes job?
Something in the sort of like sports or athletics. I love that stuff. I spend most of my day doing some sort of like working out. And obviously now I'm in the longevity business. So I own a stem cell clinic. I'm very passionate about that just because like I get injured and I want to get healed. and live a injury-free life. So very passionate about like healthcare and sports and that kind of stuff. So I do something in that realm. Fuck it, I'll even be a ski bum in Niseko if all this fails, just being a lifty.
Not an electronic DJ, given all the festivals you go to.
I need to get better. I suck. So it requires a lot more training.
Oh man,
I'm a good skier though.
Skiing. Yeah, that's true. Well, thank you, Arthur. This is very much for this. It's been an amazing conversation as always. Lots of alpha insights and gems shared. So I'm looking forward to the next one, and enjoy that Testarossa, man.
Thank you.
Cool, man. Cheers.